Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I have not one, but two trade ideas for you today. What's today's date? March 14th, Pi Day 2023, and let's see what the market is doing today. There's no pie in your face today. Even the S&Ps are pie in the sky. Up 81.25. Even the S&Ps up a little over 2%, as you can see on the right-hand side here. I like to put the percentages. You can take this line and move it up or down for when you have other studies that you put underneath here. Like if you take a look at SPY for a quick second, you'll see I have a study underneath here that shows the IV rank in a chart. You can see how the IV rank has been coming down today. The IV rank is 24 in SPY, but you can see how it was significantly higher, 40s, 50s, and 60s just a day ago. Well, that's what 2% move on a product will do to the overall market itself. Really takes in volatility. /VX is the volatility that I like to look at. You can see here over the last 3 or 4 days, as we've had a lot of trials and tribulations with the banks, you can see the volatility has collapsed quite nicely here, down $3 today, almost 12%, a little over. A big move in volatility, making it a little bit different for us to find trades, but you know I like to go into the IVX 5-day change and go to the high side and work myself lower. You'll see that SIVB is still closed and some other banks are also still closed. But if you have a position in KRE that you may have looked at after I put on my position, still a losing trade, which you can certainly see when we go to the follow page, but coming back nicely today for us as volatility. Take a look at what's going on in here. Well, here you go, volatility. IV rank got up into the 200-300s. And now look at it, is now down into the 70s, helping us out a lot better. Still a losing trade when we put this on. The IV rank was closer to the 30s. So we need IV rank to go lower in KRE for those who have asked me questions on this podcast. If you've subscribed to the podcast or if you've left a message for me, I do read them all as best I can. You can always reach me at bat@tastylive.com. That's my email address. I love to hear from you there too. Whether you're a Tasty Trade customer or not, I answer all the emails I can in a very timely basis, at least as time permits. All right, so what are we going to look at today for our two new trades with the market going higher? Well, you know I'm a contrarian. I would have liked to have put on these trades before the market rallied. You know the SPX trade that we put on just a couple of days ago worked out very nicely for us. That was a broken wing butterfly. My soon-to-be patent-pending bat broken wing butterfly in SPX that we're able to take a buck and a half on in about 4 days. That worked out nicely. I'm hoping that I can find two good trades for you today. One of them is going to be in bonds. I haven't talked a lot about bonds. I was a bond trader at the Chicago Board of Trade for about 6 months. Boy, they treated me real good, but they didn't treat my account real well. So bonds have had a love-hate relationship with me. I went back to the CBOE after 6 months of being in the bonds in around 2000 to go back to trade AOL, which was a high flyer at that time. But I'm not going to look at /ZB. I'm going to go into TLT. I got the emails from all of you, and some of you have asked, hey, some of your trades take a lot of buying power, like that trade that we did just a moment ago in SPX, which took up just about $4,700 in buying power per contract. How about giving me a smaller trade that we can do? Well, take a look here. You still got IV rank at 45, unlike what has happened in SPY and some of the equity markets. Bond volatility is still staying up. So I want to go into here and use a little less buying power for those who have smaller accounts. I'm going to go to April with 38 days to go. We always go closest to 45 days in the monthly cycle. Why don't we use the weekly cycles? Well, a lot of times they just don't have the depth of market that we need. And also, I just like to keep it clean for me. Do I have any problem with you going into the other months? No. Our research suggests closest to 45 days in the monthly options. You take it for what it's worth from there. What am I going to look to do? I'm going to look to do an iron condor. What is an iron condor? Well, it's a synthetic strangle with defined risk. So here, if I was going to put on a regular strangle here somewhere around the 20-ish delta options, I might look to sell the 100 put and a strangle is selling the put and selling the call. So I might go up to like a 111 has around the same delta. You can see here that this is basically zero delta, less than one long delta on the overall trade, and it brings in just about or just under $6 in buying power, but it uses $1,600 in buying power. My emails were, hey, I want to use $200, $300, $400, $500 in buying power. What can I do? Well, obviously, if you want to define your risk, you're going to use less buying power, but you're going to suffer a little bit on your pop. But you know what? That's what it costs for having defined risk trades. That's what it costs when you don't have $1,600 in your account to make the trade. It's better to, at least in my opinion, to make the trade than not being able to make the trade and not participating in what's going on. Plus the learning process when you take this into any other business about risk. Hey, maybe someday you'll be a bank risk manager and you'll understand how things can go higher and things can go lower, or maybe they'll just stay in a range and I can make some money. So let's take a look at this. We'll go $3 wide because our research suggests that $3 is the optimal number. You want to collect around 1/3 the width of the strikes on a $3 wide iron condor. So if I'm going about $3 wide, meaning the 111 to 114, that's $3 wide. I want to go lower by $3, 100 to 97. And I was able to do this trade at 101 or 102. It's trading at 99 cents right now. You can see the market's a little bit wider here, 4 or 5 cents wide between the natural bid and the natural offer here. I would just put this trade in at around $1, $1.01, $1.02, and see if I get filled. I want to collect 1/3 the width of the strikes. If I collect 99 cents, is that a bad thing? No, it's not a bad thing. But you know what? Every penny counts. Matter of fact, the difference between getting filled at $1 and 101, well, that's part of your commissions that you're paying on that overall trade. Now, you'll notice that the pop, instead of being 66%, is 58%, and my delta now becomes long 2 deltas just because of the skew that's in there. And my theta decay is down a little bit to $1.50, let's call it. But look at this. My buying power is only $200. $200 in buying power. I think for a new trader or somebody who's looking to use less buying power in a trade wants to watch how an iron condor or synthetic strangle works. Well, that would be the trade that I would make, and that is the trade that I made. And you can see all those trades by clicking on these little lines and going down to the follow page. You'll notice I have TLT sitting up here. I was able to do this trade at 101. I did it today, just a couple of moments ago before we made this podcast. I haven't put in any writing yet, but I will after the show. You'll notice that there's another trade I made here today in Apple. So let's take a look at Apple as we look right now, AAPL. We'll go into Apple. Let's just look at it from the top down. IV rank of 20. Doesn't seem like it's that great, but let's see where volatility has come from. Now, you look here before this whole debacle with banks, which I don't know what Apple had anything to do with the banks. You can see volatility was around 10, 12, 14, 15. So we have had a good rise in volatility, although timing is everything, and even the S&P is up 82, and volatility contracting by 12% is going to take something like Apple, which has a 0.83 correlation to the overall market, is going to take volatility out of that. And the trade that I'm going to make here is I'm going to go to just about a 1 standard deviation here in April before earnings. I don't want to be involved in earnings when I'm putting on trades. At least that's just my own personal preference. I know Tom doesn't mind having trades on for earnings. I like to keep it clean and not have a trade on for earnings. Let's take a look at this before we even look at the strikes that we're doing here. It has a probability of profit of 70. So that's outside that standard deviation of 68%. It's got a delta of -2, relatively small amount of delta. I consider that delta neutral. It's collecting almost $9 in theta decay. And even though it has an IV rank of 20, I'm using $18, almost $1,900 in buying power. The beta weighted delta is -1. When I'm beta weighted means to SPY. Let's see what the strikes look like on the chains. I'm doing the 140 put, which has just about a 17 delta. outside that one standard deviation with my credit, just about. It's right there. You can see the line in green here. This is my win area for the stock, below 140 and above 165, because I'm short the 165. As a matter of fact, wherever you get filled on this, I was able to get filled at 269 just a moment ago, so maybe volatility will expand, or Apple will move a little bit to allow you to get filled at that same price. Would I put it in at 261, 262, 263? Sure, I guess, but I would wait. If you know that I got filled at 269, maybe 265, 268, let the market come to you. What's my break even? 165 plus 262, that's your break even. So above 167 and a half or so, and below around 137 and a half. Those are your break evens on this trade. Let's take a quick look for those who are chartists. I don't know what to look at when I'm seeing these charts, but I just told you the break even is around 137 and change. Apple has not been down to 137 and change since early in January, and my break even is above 165, 167 and change, and Apple hasn't seen that since since September. So for me, that's the trade that I'm going to make, and I like my break evens, and I like volatility to contract in there. If you go down to the follow page here, pardon me, if you go down to the follow page here and click on it, you'll see here's my Apple trade. I got filled today. Apple was 153.16. It was basically the same price it's trading at right now, but I got filled at 269. That's more of volatility / VX contracting today. If you take a look here, well, let's just do this for you. I'll just click on my name, so it'll be all of our trades that we've done here. You'll see here's my SPX trade that I closed earlier today while we were doing the show at 8:38, slightly after the market closed. You probably could get filled even better than I did, $2.35. We took about $1.25 on that trade in the last 4 days. All right, listen, everybody. You love this podcast? Please like it. Give me the likes. The kids tell me that that's what keeps these podcasts alive and get us to the top of the line so that everybody can see us. Please open, move, bring your account to tastytrade.com. That's how we keep the lights on here and how I get to do this podcast for you.